crypto's latest surge, minting a new class of millionaires. Robert Frank joins us right now on where this group is putting its money to work. And Robert, always great to see you.
Great to see you, Becky. Good to see you, Mike. Well, the rise in Bitcoin recently helped create another 70,000 crypto millionaires. That's just over the past year. There are now 240,000 people with crypto holdings worth $1 million or more. That's according to a new report from Henley & Partners and New World Wealth. There are 450 crypto centimillionaires. Those are folks with $100 million or more in crypto. And 36 crypto billionaires. The price of Bitcoin more than doubling, of course, over the past year. And the total market cap of all crypto has increased by over $2 trillion. So how much of that is going to be spent? Well, new research by a group of economists found that for every dollar gained in crypto wealth, crypto investors spend about 10 cents. So that would equate to about $200 billion in additional spending this year. With early crypto investors now getting up there in age, so sort of in the 30s and 40s, buying Lambos has been replaced by real estate. Study found that locations with large crypto populations saw larger gains in home prices when there were crypto rallies. Now, for more on the new crypto wealthy and a roundup of the latest family office deals in September, you can sign up for the new Inside Wealth newsletter out tomorrow morning at cnbc.com/insidewealth. That's cnbc.com/insidewealth. Where are
the areas where geographically where you see this kind of bust or boom in real estate cycles around it? Where I would imagine, Silicon Valley, Miami, here in New York.
It's definitely Miami. It tends to, when I ask the researchers where the locations were that tend to be hotspots for crypto, the one common denominator is low tax areas. So it's mainly the Sun Belt states, Texas, Florida, not so much New York and California, interestingly. Tennessee also. So
I guess that makes sense. If you've made a huge amount of money in the crypto purchases that you've made along the way, if you have to sell it to buy an asset, like a home or something, you're not going to want to do it in a high-tech state.
Exactly.
Or if you're the type of person who believes that it's the only true form of money and government paper illegitimate, if you're a true believer. Yeah. The question I had actually...
Do you sell it? I thought you were...
Well, that's the question exactly I had, which is, are people essentially borrowing against their Bitcoin to buy these things, or are they just kind of liquidate a piece of them? I'm sure there's no way to
what was interesting in this research, there seem to be two big buckets of crypto investors. There are the whales, the long-term holders that rarely sell, but when they do, it tends to be at market peaks. Right now, the sort of more diversified crypto traders, they're not selling right now because they see, sort of riffing off the Paul Tudor Jones comments, that we're about to see a big run-up before a sell-off. Eventually, crypto, they know there's going to be a cycle, but they feel like conditions are ripe right now for Bitcoin and crypto to go higher.
Because of inflation, because of the same reasons that gold is running higher, or because of the lighter regulatory touch, maybe all of those things?
All of those things combined with the fact that you've got this euphoria over AI that to the extent that crypto trades a bit like a speculative tech stock as opposed to a safe haven, that's going to run up as well.
It trades like a promise of some version of the technological future.
Exactly.
And also its massive computing power that is somewhat parallel to what's going on in it.
Yeah, so there are a lot of Bitcoin folks, even though we've seen this huge value creation, and I'm realizing they're probably not going to spend it right now because they see more potential for a run-up. So we'll see how much impact we'll see in the economy. And gold, probably the same thing. If you look at the market cap of gold, it's over $20 trillion.
27 trillion now. Yeah. About half of the S&P 500 market.
So that's created, well, those folks tend to be older investors, and so they don't tend to spend as much as their wealth as the younger folks.
Go ahead, say it. Boomers.
Yeah.
That's what you're thinking.